News just broke that mortgage rates have fallen yet again over the last couple of weeks, which is bound to send a ripple wave of effects throughout the Bay Area housing market. But what does this mean for you if you are a home buyer and seller in the marketplace right now? Coming up on this Silicon Valley Snapshot. Rising mortgage interest rates have been the biggest factor in the decline in pricing here in the Bay Area housing market over the last 8 months. And just right now, hot off the press, we've seen yet another dip in mortgage rates, which have been trending down for the last couple of weeks, over a month now. Interest rates have been trending down, which should be great news if you're a home buyer, but it should also be great news if you're a home seller. And we're going to get into all of that. We're going to get into some data, some really cool facts. But before we get into that data, if you're a home buyer in today's marketplace, you're looking for a comprehensive data set to assist you in your home buying decision making, you can text the word data plus the neighborhood or the zip code or the area that you're looking in, and we will get all that information sent straight to your inbox. And if you're a home seller in today's marketplace, you're trying to figure out, well, now the right time for me to sell. And if I do sell, like, what should I price my property for? Because right now, pricing strategy matters more than ever. You can text the word data plus your property address for a custom report delivered straight to your inbox. Mortgage rates have been trending down since late November, early December. And yeah, we've experienced some bumps up and bumps down, but overall the trend has been coming down over the last 8 weeks or so. Matthew Graham of Mortgage News Daily reports that the average lender brought down rates roughly 0.125% lower today versus yesterday. And this was published on Thursday, January 12th. This makes for conventional 30-year fixed rates in the low 6% range. You'd have to go back exactly 4 months to see anything lower. And by the way, a lot of the lenders that we work with here at SSV are reporting rates in the high fives. Just yesterday, we were having this conversation. And so if you're interested in figuring out what rate you would be quoted in this brand new mortgage environment, you can text the word rate to the number down below. That's rate to the number down below. And we will get you introduced to one of the most competitively priced lenders in the country. So now the question becomes what to do with this information if you're a home buyer and what to do with this information if you're a home seller. Let's start with buyers and then sellers. We'll get to you in a second. So if you're a home buyer right now, what we're seeing is there's really two different types of buyers. So speaking to one of two types. First one is you are pretty keeping your hand on the pulse on what's going on with the mortgage rates. You're seeing what's going on right now and you're jumping on the opportunity because you're like, wow, this is the lowest the rates have been in quite some time. And I see the opportunity in front of me. The prices have come down significantly in the last 8 months. So I'm winning on rate for the first time in a long time and I'm winning on price for the first time in a long time. I should probably jump into the market right now. Awesome. If that is you and you see the opportunity, then don't change a thing because honestly, it's true. The opportunity is there. The rates make sense, more sense than they've made in quite some time. Obviously, relatively speaking, recency bias here. Go back a year, doesn't make sense at all. But in the last 4 months, it's the lowest it's been. So looks like a pretty good opportunity. Now, you might find yourself in another camp, like the buyer who's a little bit more skeptical. You'd be like, I don't know about this, right? I've danced this dance before and it kind of feels like, okay, maybe things take a turn again and prices continue to come down. Okay, awesome. Well, what would cause the prices to come down even more is if the rates turn back up around. So theoretically, we could see another dip in prices. And I would say that based on a lot of factors, and we'll get into those factors in a second, that is probably not going to happen. But let's just play devil's advocate here and say that it does. Likely what's going to happen is rates would have to continue to come back up. So we're either going to pay a higher price because interest rates continue to come down, competition goes up and prices go up, or prices might come down, but only if rates come back up again. And if that happens, the monthly payments are going to be impacted. So either way, it doesn't look like any buyer who's going to sit on the sidelines for the next 6 months comes out of this ahead. The buyers who are jumping in right now seem to be the ones that are going to be set up for the most opportunistic scenario that we've seen in quite some time. Now, if you're a home seller, what to do with this information? Because yeah, this is great news, but will those rates necessarily impact prices today? Does it mean that we should wait a little bit and see how things shake out? It's really, really difficult to predict. And honestly, I would recommend that you sit down with me to go over your specific data, your specific neighborhood, because is every neighborhood has a slightly different timing that I believe is going to be the best time to put your home on the market. Some might be February. Some might be more like towards like late March, early April. I don't know how long this mini spring season is going to last, but all I know is that it's going to be accelerated and it's going to be pushed forward. So what we saw in 2019, and if you watched last week's Silicon Valley Snapshot, I went into this data in great detail where we looked at what happened in 2018 to 2019, cross-compared it to what's happening right now. And there's a lot of similarities. And what we know is that in early 2019, we had a mini spring market from mid-January through like mid-March. And then after like late February, mid-March, most marketplaces kind of went back to like neutral. And it's a good possibility that that same thing happens in 2023. So in other words, we could see prices rebound a bit over the next 60 to 90 days and then stay fairly flat for the rest of the year. That is likely what is going to happen. Now, as a seller, you have to choose. Would you prefer to sell during the run-up where you have increased competition relative to the amount of inventory on the marketplace? Or do we want to just kind of sit it out, wait and see what happens and then maybe put the home on later on in the year? The only difference is that right now you could capitalize on a multiple offer opportunity, meaning like, late January through like mid-March, you could capitalize on multiple offers. And then likely after that, we could see a return in terms of like a more neutral market. Now, not a guarantee. That is a good possibility, but it's not a guarantee. Something to note, and if you watched last week's snapshot, you'll see the graph up here right now, is that in a lot of counties, we are seeing the trend of inventory levels and demand coming closer and closer together. Pendings and inventory levels coming closer and closer and closer together. If you watched last week's video, I went into that in detail. And as these lines converge, market conditions get hotter and hotter and hotter, or become more and more in the seller's favor. So we want to keep an eye on that. And of course, we can expect this great news when it comes to interest rates to positively impact buyer demand. But it remains to be seen what this does to inventory levels, because inventory levels have been coming down fairly dramatically over the last couple of months. Now, this is a seasonal thing. We know that like in the winter time, like inventory continues to come down. But the question is do these lines converge even more? Meaning, do we see that delta between inventory levels and pending continue to converge, maybe even flip like they did for so long in 2020, 2021, and 2022? Or do we see that delta grow and grow and grow? Well, that remains to be seen because there's two things to pay attention to. It's demand and inventory levels. The one thing that I do know for sure is that interest rates are going to positively impact the buyer demand in the market right now. That is a guarantee. The question becomes, what does this do for sellers? Do sellers get off the fence faster and put their homes on the market and therefore we see a net neutral effect? Because sellers are responding to the good news of the interest rates and deciding to get their home on the market faster? That remains to be seen. What I know is this though. I have 20 plus agents as a part of my organization. We're showing buyers almost every single day. And I get to keep a pulse on what's going on every single weekend. And last weekend, I had reports of 100 visitors at an open house during the entire weekend. So Saturday, Sunday, 100 groups came through the open house. Those are like early 2022 numbers. The amount of traction versus like in October, November of this last year, we're like lucky if we got 10 groups through both days total. So that should tell you what's going on right now in terms of demand, in terms of like interest level and everything. So things are looking like they're going to become very competitive here very quickly. And it depends on the inventory levels to see how much of an impact this renewed demand has on the market. Because if inventory levels keep up with the demand, then we won't see much of an effect at all. But if we see inventory levels stay suppressed, stay low during the winter months, and a renewed interest and a renewed demand due to these lower interest rates, then we could be in for quite a crazy ride over the next 60 to 90 days. One thing is for sure though, regardless of what happens, if the market goes up, down, or sideways, the Silicon Valley Snapshot will be here to give you real information, real data in real time. So if you haven't subscribed already and you're this far in the video, what are you waiting for? Click that subscribe button. Give us a thumbs up while you're at it. It helps, it costs you nothing, and it helps us get in front of more people just like you. And click that little notification bell so that you get a little notification every single time that we post another Silicon Valley Snapshot. This is Danny Gould. I'm selling Silicon Valley, and I will catch all of you in the next video.